Thank you. Good morning, ladies and gentlemen. Wow, it's great to be here, Chris. Thanks for inviting me. And this morning I'm going to be talking about, and it's interesting because between Jordan and Jorge, I feel like I've been given a real good lead-in for this subject in terms of what I'm going to be talking about, which is really what's going on in the world of IP, but particularly as it relates to funding and funding sources and financing for businesses and startups using intellectual property. And so what I'm going to cover today is really what's going on that's led up to this recognition by what's considered traditional funding sources that suddenly intangible assets, particularly intellectual property, have real value, have big value. And in many ways, these are some of the most valuable assets that they need to take a hard look at and can be used for funding and financing, and are being used for funding and financing. And then I'm going to share with you just some of the financing options that are out there today. More are being created as a result of the financial community finally taking a hard look and realizing that there are ways of putting together financing, and it's happening very quickly. And then finally, what's going on and what you need to do for IP funding. First, I'd like to share with you just a little bit about my background. It's interesting, particularly Jordan, all the points that you made about intellectual property, especially some of the issues and challenges that these inventors have, not filing patents, disclosing it publicly. I can tell you that I've experienced it all. I work with manufacturers, inventors, patent owners, companies that are looking to acquire IP. And basically what I do for them is on the money side of intellectual property. I figure out how are we going to go and make money with the intellectual property assets. And Jordan brought out some really good points, and I think one of the biggest ones is overlooking what you have, or not looking at it properly. And I find that quite often. Sometimes when I work with companies, especially if they're in the product business, they're very focused that all we have is a product, and they may have an invention with a patent behind it, and they completely miss the trademarks, the branding, even the trade secrets, the know-how behind it. And they leave a lot of value or expose those, and they become public domain. And in other cases, I find that companies that come with wonderful new products and patents have gone out and actually made the things and started selling them, and never even dawned on them that they've got to get the patent process going. So it really runs the gamut, and I think, as Jordan had laid out for you, it really is a process that you really need to pay attention to, especially from the investment side, and see what's really going on behind the scenes. Jorge, it was a great presentation you gave. I can tell you from firsthand experience that Mexico is definitely a big market. My experience is working at the entertainment studios, and I spent a number of years working at Warner Brothers when they started doing licensing for a movie called Batman. They evolved into a big franchise. And then I went on to Saban Entertainment, who had another property called Power Rangers. Now, Power Rangers was interesting because at the time, I was running the North American division, which included Canada and Mexico. And surprisingly, Mexico had become a very big market for Power Rangers. And I was going down there about every 2 months, working with a lot of companies in Mexico who wanted to get a license. What was happening is that the television show was on in North America, but there was tremendous spillover of television into Mexico, and it was being translated here for the Hispanic audience, but it was reaching down into Mexico, and the manufacturers down there were demanding that they get license rights to start delivering products to market. Now, typically what the studios do is they lag international 1 year behind, figuring that U.S. takes the lead. Except in this case, what was happening in Mexico is they were getting officially Televisa was broadcasting the show 1 season behind. Unofficially, it was spilling over on the TV station, and consumers in Mexico were seeing the current episodes. Well, they wanted the current products. And it was a very interesting time going down there because when I visited, we were meeting with companies who were demanding, let's get the license, we need the product, we need it in the stores now. And Chupa Chups, Televisa, Bimbo, Coca-Cola, Pepsi, these are all the companies that were involved. And licensing was, especially Power Rangers, was a way for a lot of small businesses down there who got the license, as well as U.S. companies coming in. They were making a lot of money. I'm sure it's changed a lot. They could assure you your services 20 years ago when it was that hot. But the point being is that licensing has really been a tool that, while generates big dollars, is being underutilized. So when you look at intellectual property today, what I want to do is kind of share with you a little background that takes us to this idea of IP being recognized from financing. When you take a look at intellectual property today, it really has become one of the world's most valuable assets. And it's being recognized by governments all over the world. You're starting to see governments that up until a decade or so ago did not have strong intellectual property laws. Suddenly those laws are being changed, upgraded, and basically they're looking to harmonize. If you look at the big trade agreements that are being negotiated, TRIPS, things like that, intellectual property is at the forefront. And the reason is because they realize that that big money now is being generated, is being created with intellectual property. And in fact, when you see the news today, and Jordan touched on about litigation, you see so many stories about IP. Now, granted, a lot of it is about litigation, but really what's going on underneath that is because there is so much money at stake, so much value. And you see big companies out there duking it out. And they're duking it out. You hear a lot about patents, you hear trade secrets over either keeping somebody out of their market space, somebody infringing, whatever the case is. And we're talking about tens of millions, hundreds of millions of dollars. So IP really, as we look at where we are in the 21st century, in a lot of ways IP has become like the key resource for all products and services and technologies today. When you think about some of the largest companies out there, the biggest, most valued, biggest market cap companies, Google, Microsoft, Apple, these companies are all built on intellectual property. They're not they don't have big manufacturing plants and property and things like that anymore. This is all about IP. And they're out there, you see cell phones, Motorola, Samsung, all these companies. It's all about the intellectual property today. When you look at the balance sheet, you see valuations of companies today. The biggest value is coming from intellectual property and their intangible assets. So what you've got is an economy that's actually shifted. We are coming out of an industrial-based economy, which is tangible products and services, physical assets into intangible assets. In fact, many of the companies here today presenting, you have intellectual property. In fact, intellectual property probably represents the bulk of what your company has in value. And this is where the point about valuation does become important. That really what you're seeing today is more and more companies that are moving toward a model that leverages their IP, that generates revenue, that uses those intangible assets and is putting them to work, not making and selling a product and service, but licensing and leveraging and going into the marketplace that actually is building a bigger pie. And as I said, what you find is the value of your patents, trademarks, copyrights, trade secrets is often really the bulk value. A lot of acquisitions today being made, and you read about them, these acquisitions by many of these large companies, what they're buying is the IP portfolios. They're not buying the factories and the plants. In fact, in many cases, they're casting that off. What they want is the intellectual property. That's the real core asset. That's the real value. And what's happening is licensing has been exploding. And it's hundreds of millions, hundreds of billions. Nobody really quite knows how big it's growing, but it continues to grow because this is a model that's being deployed all around the world. And it's interesting when you look at the balance of trade payments, which come out every month. What you find is the United States is always running a deficit in tangible assets, tangible trade, but it's always running a surplus in intangible, licensing royalty revenues that are coming in from licensing deals from deploying those assets outside the United States. The other thing that you're seeing is that Wall Street is making big play into this. So what you find is that companies that have IP are attracting capital. In fact, studies have shown that having IP is critical to funding. Then there's two ways of financing IP today, debt and equity. And you've got a number of different financing options that exist today. I won't take you through all of them, but you've got royalty securitization, IP investment funds, commercial finance, royalty interest, sale and leasebacks. These are all forms of financing option that are all being done based on IP. For your asset-backed loan, whereas you had your assets such as your plant and equipment, where you got loans on, now you can take your IP assets and get loans on those. And you're seeing this happen. One of the biggest to date has been Traylid Paper Group. They acquired $1.3 billion in loans off their patents and trademarks. In fact, BlackRock is now getting into this market. So it's a growing market that's now being recognized. IP investment funds, basically what they do is they've got hundreds of millions of dollars and they deploy this money basically in a pool of companies with IP, basically to spread the risk. And you have a number of players that are out there looking to make these investments. In fact, Chris and I were speaking about one today. Royalty securitization on the equity side. This is where companies that have got their IP out there deployed in licensing agreement are generating royalties. Basically, they're collecting the value of those licensing deals up front today in return for paying the future payments to the investors. And you've seen many of these deals being worked in the millions and the billions of dollars. IP financing firms. These are firms that work as direct or as intermediaries with companies that have IP assets that are looking to find a lender who will lend against those assets. In the case that they don't have IP that's quite up to the value they're looking for, there's credit enhancement firms now that take a look and analyze the IP, and they actually come in as a guarantor of the portion of the loan that's going to be made against the IP assets. And the most important thing that focuses around this, and Jordan brought it up, is third-party valuations, using IP valuation firms. I've worked with several IP valuation firms. I've spoken to them on many occasions. They're spending more and more time on doing these valuations of IP assets. Why? Because they're being asked by the banks, by the lending sources, to value those assets so that they can make the loans against those assets. And this is occurring more and more. It adds to credibility. It gives them the valuations they're looking for. It establishes the value. And when you get a valuation, it actually improves your business and the value of your business. So when you look at using your IP assets to acquire funding, and it's something you should be looking at, especially if you've got a lot of value or you haven't examined the value, first thing is an IP strategy to protect it, to manage it, and to monetize it. The second is generating revenues. If your IP-based products or service or technology out there generating sales, if they're out there under a licensing agreement generating royalties, they have the potential to be financed. If you're not sure what you have or you haven't identified what you have, an IP audit is imperative that you do that. You've got to put your arms around what you've got. So, as I said, it's not always necessarily the product or service direct, but you have know-how, you have trade secrets, you have brands and trademarks. All of this needs to be accounted for, which is what an IP audit. You do an inventory audit, why not be doing an IP audit? And finally, the valuation, as I said, which is a verification of the market value of your IP assets. So I know I ran through that quick, but I wanted to give you a sense of it. That concludes the presentation. If you're interested, I offer a monthly newsletter. You can sign up at my website. I thank you for your time, and if you've got any questions, I'd be happy to answer them.
Anthony Randall, that was a good presentation. On the IP audit to value the IP assets, if they're not revenue producing, can it be done? How much would it cost?
Yes, actually, there are valuations for non-revenue producing IP. Again, an audit firm, a valuation firm would have to go in there, but the first thing to do is to make sure that you've got all of those IP assets, whether it's a patent, trademark, brand, whatever the case is. And they have to do that anyway, by the way. If you bring a valuation firm in and you're not sure what they have, they're going to have to do an audit of your IP and figure out exactly what you've got in your portfolio. And as I said, oftentimes it's what you know in your head in terms of the way that you deliver your IP that can be a big valuable part of it.
But you don't know any of the formulas they would use for that?
No, but they have. There's future discounted cash flow formulas, income approach, cost approach. There's several different approaches they use to the valuation. It all depends on what the IP is, what the status of it is in the market, and what kind of funding that they're looking for.
Right, from the financial perspective or CFO perspective, we look at from a general accounting accepted principle GAAP on how we recognize it on the books. There's a valuation and there's a book value. Do you guys have issue in terms of arm wrestling, in terms of how do you put the real value on the valuation?
Actually, good question. A lot of times valuations are done for that very reason, to value them and establish a book value that then goes on the balance sheet. And for companies that haven't done a valuation of their IP, and it has been in the firm, a lot of times they do those valuations and suddenly the value of that company is way up. Okay? Yes?
lending to valuation ratio, is there a magic number? If it's valued at $1 million, they lend you 50% of
You
that?
know, they do have some ratios, a good question. I'm not familiar with what they are. The industry, you know, this whole idea of IP financing is still evolving very quickly. It's all over the board. It just depends on what the IP is, the technology is, who they go to, what they loan against, all sorts of things.
How is the valuation done? Is it based on the demand for their licensed technology, or is it based on the strength of the actual underlying rights?
Actually, a combination of what you talk about. It's market factor, it's the registration, the strength, the protection, where it's been used, if it hasn't been used. It's a lot of variables. It's not quite as straightforward as tangible asset valuations because you have so many of the variables that do impact intellectual property. Okay?
Well, thank you,
Thank
Ran.
you. Thank you.